Hello, everyone, and welcome to this panel at OpenViews 23. I'm Uri Tintore, co-founder and co-CEO in Belvo, and I'm excited to introduce you the incredible speakers that are joining us today to discuss global trends on open finance and account-to-account payments. This is probably one of the most exciting topics we're covering in a version of OpenViews that is particularly focused on payments and the new opportunities that the account-to-account rails present in the market. Today, we have three amazing speakers that will be sharing their expertise in the subject. First, we have Jasper, VP of Corporate Development and New Markets at Think. We also have Andres, VP of Marketing at Trustly, and Pike, leading global partnerships at TrueLayer. I'm personally super excited about this panel, as this is a topic where we at Belvo are focusing a lot and where we have recently launched several solutions to the market. So I'm sure it will be inspiring to hear from you, especially in the status of account-to-account payments worldwide. So let's get started. And probably the easier way to get started will be with a basic question that when we talk about account-to-account payments. I mean, how are these payments different versus existing methods, and what are the main benefits that are making account-to-account payments increasingly popular in the markets where you operate? We can probably start with you, Jasper, and then everyone else can comment as well.
Absolutely. Thanks a lot, Yuri. And thanks for having me on. It's a pleasure to be here, and especially with such distinguished colleagues here as well. We are similar to you, right? Very excited about the potential of account-to-account payments, and specifically a pay-by-bank payment method. For a payment method to reach real adoption, you need all stars to be aligned, basically. And that doesn't happen very often. But in many markets now, it seems like the stars sit just right for account-to-account payments or pay-by-bank. And the main drivers for that, coming back to your question, are then the benefits that account-to-account payments really bring to the full financial sort of ecosystem. You have for end users a great payment experience that is fast, it's familiar. We talk about it as a new payment method, but it's a bank transfer, right? That everyone knows, and it's a reliable method. For merchants, we can offer, or pay-by-bank can offer a payment method that is low cost, low friction, low fraud. It's typically instant. And primarily maybe available to every customer that has a bank account. For banks, also part of the ecosystem, it means potential to attract new customers and new revenue streams. And finally, perhaps for central banks and authorities, account-to-account payments have in many markets been an accelerator of financial inclusion and moving from cash to digital payments. So it has benefits for the full ecosystem. And now, why we're talking about it so much now is that now we also have key enablers like technology and regulation coming in place in order to make these benefits not only in theory, but actually true and coming alive. And that has accelerated investments in this space in recent years, in everything from the underlying pipes, investments in real-time rails from central banks, to investments in technology provider like the people in this room, and maybe more importantly, companies that now realize that if they are taking payments seriously, it can be a competitive advantage for them, and companies then want to be in the forefront of driving pay-by-bank adoption. I'm sure we'll go into all of these, the details of this in the coming the discussion here, but maybe I'll leave it there as a start and see if there are any reflections from the group.
I guess the only, that was pretty spot on, Jasper. I guess the only other thing I would add is if we look at it from the merchant perspective, a merchant cares about users arriving at their checkout page and successfully completing a transaction. And so they are myopically focused on prioritizing the payment methods that tend to have a high conversion, which is to say the portion of users that are successfully completing a payment. They care about the payment methods that are more protected on frauds, as well as the ability to settle funds as quickly as possible. So traditional payment methods, settlement times can range anywhere from T+1, T+2, T+3. The faster we can settle a merchant, the more efficient their operations become, and therefore the more value they put on it. And so ultimately, the success of the payment method just comes down to like, what can you win at checkout?
Yeah, that's a very important point. I think in certain markets, consumer adoption and consumer preferences around payment methods truly dictate and will be an enabler of the success of account-to-account payments. Here in the US, where I'm sitting, it's a prevalent card market. So account-to-account will need to provide certain incentives for consumers to switch over to that payment method. Back to your point, Pike and Jesper. That is a star, I think, that still needs to get aligned in markets that are credit-centric or card-centric like the US. So it's going to be very interesting. But it's, the way we look at account-to-account, it's also an amalgamation of different payment rails, payment methods, right? It's direct debit in certain countries. It's interbank transfers. It's open banking, as we're all very aware. And I think that's going to be, in our opinion, a conversion of multiple regulation and technology parallel tracks that will lead to the adoption of account-to-account more broadly or globally. So very interesting to follow this space. I think it's a very hotbed of innovation. Obviously, multiple companies betting on it. So yeah, exciting to see what the future holds for it.
And then probably you're all experiencing a lot of challenges, right, when trying to adopt account-to-account payments. Maybe can you comment a bit on some problems or some difficulties that the account-to-account model still has to beat in order to grow in adoption and become even more competitive against other more established methods? I don't know if here, Pike, we can start with you.
Yeah. So when I think about how do we sort of improve adoption and become more mainstream, you gain adoption by improving the variety of merchants that are using your payment method. You improve adoption by offering the payment method in more than one geography, and in essence becoming a bit more ubiquitous. But the challenge is, anytime you're building a payments product, different markets have different limitations. You have different payment rails. You have different currencies, different banking infrastructure. And so to create a ubiquitous experience across multiple geographies, across different types of industry verticals, that becomes very challenging, right? So if you think about a card payment in the US is more or less like a card payment in the UK, which is more or less like a card payment in Dubai. It's much harder to create that level of homogeneous experience with account-to-account payments. And I think, certainly Truler and its peers have done a remarkable job of that, which is why account-to-account payments are becoming so popular now. But it does remain a challenge. The second thing I'll say is, and again, if we compare ourselves to the incumbent method, which is typically cards, you have these mechanisms of protection built in for the consumer. So trust has been built into the payment method, right? If I buy a plane ticket and I'm trying to get my money back, I can be reasonably assured that I can call Amex and get my money back. Those types of mechanisms aren't necessarily, prevalent in the alternative payment method space. And I think it will be a barrier to mass adoption at some point. I think at this point, most companies are sort of operating in very niche verticals. But as we become more and more ubiquitous, as we go into certain industry verticals where risk is a little bit different, we do have to then start to introduce some of these mechanisms so that the consumer feels that if they make a purchase using this method, that they feel as protected as they would through a Visa transaction.
It's about protection, of course, but also about, as you say, awareness, right? I mean, still in some, as you say, where account to account, maybe, well, especially a few years ago, right? Primarily prevalent in more niche use cases, and maybe where you only have one payment option. Whereas in a full, when you take it to the other side of that, the full sort of commerce checkout, where you have a lot of payment options. Field protection, yes, but also about sort of awareness and being on top of that checkout, and being that that payment method that consumers are used to. I think it's probably also sort of important. It's not necessarily so. I think that they don't feel protected, and that's not why they're choosing pay by bank.
Yeah, I think it's a it's a game of value propositions, right? I think it's very clear to the merchant that with an account to account or an open banking payments method, they can lower the cost, they can increase conversion, they can get the coverage that provides ubiquity. But what is the motivation for the consumer? And back to the awareness, back to the conversion rate problem. Is this payment method solving issues that other payment methods don't? And I love your analogy about cards, right? It is a very similar experience wherever you go. Whereas account to account is a very localized, regionalized experience. And I think that's one of the challenges, back to your original question, Uri, is how do we evolve and create an interoperable network of account to account? I would go further and say real-time, truly instant payment. That's cross-border, that's ubiquitous, that's global. And I think that's one of the challenges that many will face. I think open banking can solve a majority of that. Many countries have adopted regulation. In Europe, obviously, there's a very nice effort of combining payment directives with open banking regulation to solve for some of these issues. I think we're going to see a lot of that in South America. Certainly, the framework that the US and Canada are following as well. So I think all of the above will help make it a mainstream payment method, but we can't forget about the consumer motivation.
Cool, super interesting. And one of the topics that you've been talking about is how do we make account-to-account payments kind of equal across different regions. And I believe several of you operate payments in different markets. So curious to understand a bit more if you can talk about the specific payment rails that enable account-to-account payments. Maybe we can focus in Europe versus the US. What are the different rails? How do tech players connect them? And what are kind of like pros and cons of some of these different rails? I guess, Andres, when you probably worked a lot in different markets, Plaid has recently announced a lot of work in the US on payments, but also willing to hear from all of you.
Yeah, I think Trustly sits in an interesting place, right, with the merger between Trustly out of Sweden and Pay with My Bank out of Silicon Valley. We have that duality, and we can look at what's happening in Europe, and we were at the forefront and sitting at the table with regulators, establishing the framework for PSD2, making sure that the industry and fintechs were getting fair treatment when open banking regulation came about. Similarly, we're operating in a very similar fashion in North America, collaborating with the regulators in Washington and in Canada to make sure that there's a fair and level playing field. But from a payment rails perspective, Trustly is absolutely agnostic. We want to ensure that we provide coverage and least cost routing for merchants and accessibility and choice to consumers. So, you're going to see us potentially routing transactions in BACS for the UK, SEPA direct debit, ACH in the US. But we're also partnering with, and we're live with, real-time payments rail from the clearinghouse. We've been collaborating with FedNow, which announced their launch in July of 23. We've been a part of the drafting team alongside merchants like Google, Walmart, US Bank, Wells Fargo. So there's real traction in North America to get to a place where, historically the US has felt like a lagging, player. And I think that's again, back to the adoption and back to the growth of account to account and open banking payments. I think that's going to be a catalyst for all of that. We see it happening globally. I mean, you have Pix in Brazil, you have Transferencias 3.0 in Argentina, you have Pagos Seguros en Línea in Colombia. So there is a very similar playbook that's being replicated across multiple regions, multiple countries. And from a fintech perspective, and I would love to hear everyone's thoughts on this, I think we need to maintain a level of rail agnostic approach, because ultimately we want to reach that awareness, reach that ubiquity, but reap the benefits for both merchants and consumers.
Yeah, no, for sure. I guess that's the long-term objective of any multi-geo account-to-account processor like the ones of us, right? Absorbing that local complexity of the local payment rails and into one seamless integration for us, especially the customers, right? And then for the merchants, for end users, yes. Having similar payment experiences across markets is of course beneficial. Payments are typically local, right? And I guess most payments are very sort of domestic and localized. So you want to have the best payment method in each local market, right? When I look at different markets and where account to account has been sort of quite well adopted, I guess you can. There are many ways to slice it, I guess, but I guess to group them in two different groups, and one would be where you have quite new real-time underlying rails that are often new and often quite heavily supported and pushed by central banks that provide them third-party access to the rails and often has sort of built-in overlay services like alias IDs, etc. And the actual account-to-account consumer-facing payment method is often a part of that new infrastructure as well. And you see that, for example, in Brazil, it's a brilliant example of it, right? And there you also then see quite immediate adoption of that payment method and of account to account. And in other markets where you have, call it a legacy rails, for lack of a better word, you see instead innovations being built on top of that or next to perhaps those rails to provide also a real-time experience for consumers and merchants. And specifically thinking then of the I guess a number of markets now we have in Europe where you see bank-owned schemes that have built those incredibly successful payment methods in Sweden with Swish or in Poland with Blick, and that has led to sort of true or real adoption of account to account as well.
Excellent. And maybe one interesting topic when we talk about account-to-account payments is today, if there's one thing that probably we lack is variable recurrent payments. I think it's one of the trending topics. Everyone wants to access it. So, I mean, what do you think is needed to really see variable recurrent payments being a reality? And what is the potential that variable recurrent payments can unlock versus where we are today?
No, I guess what is needed is, or from my perspective at least, it's we are on that trajectory, right? Well, especially in Europe. Well, I sit in Stockholm, that's why I'm focused on Europe a lot. But we see that we are on that trajectory now in the UK, right, with VRP being rolled out, and there are discussions around. Well, then in the EU they talk about DRP instead, because they just have to use a different acronym for it, but it's the same type of, instead of variable, it's dynamic, So and I think that the potential of it is very high, and I mean it's essentially for the audience perhaps. I mean, variable recurring payments is basically a new regulation where banks where banks are mandated to provide a feature for a business to set up a recurring mandate for a consumer to fetch funds from the bank account. At a set, recurring without sort of authentication during at payment, and so it's similar to a direct debit, but much more flexible, and where you can limit it in time, you can provide different schedules in terms of timing, and maybe especially the setup process or the initial process where you sign up is much more convenient than the very cumbersome method of establishing a direct debit. And the real benefit for a merchant is that it's instant, so that they know immediately when the funds are going to be withdrawn. They know if there are actual funds on the customer's account. And insufficient funds is a great cost for merchants today. So it has for sure potential to really disrupt the billing segment in any market, I would say, where it's being rolled out. And you need to do that in similar to what I mentioned before, right? In partnership with the full ecosystem.
You want to go, Pike?
Yeah, I was going to say, you know, the UK is sort of at the forefront of variable recurring payments, and we've been working with banks and regulators alike to bring it to market. And I think ultimately it will happen. There are a few, to answer your sort of original question, what needs to happen for VRP to be a reality. On the bank side, you know, I think we're really trying to align the right incentives. What should the commercial model look like? When you move towards VRP as a payment method, and again, this touches on something I touched on before, you get into a lot of the nitty-gritty elements that existing payment methods have already solved. Like, what happens if a merchant goes bankrupt? Who's liable? You know, how do you assess risk on different payment types? How do you make a customer whole if something goes wrong? Like, these types of guardrails are non-existent today in open banking payments. And so if you're moving towards a fully commercial model of payments between banks, payment providers, and merchants, these things need to be addressed to some degree. And so I think we're doing that now. We're working with banks on an industry level between what we call, you know, the payment third parties and the banks to achieve that model. And the regulators are also quite engaged in helping us sort of work through that process. And I think that's one of the first things. The second, really, and I think this comes back to the point of, like, you know, how do you sort of gain adoption, is bringing it to the merchants and showing them the value of variable recurring payments. So one of the things I like to, we talk to a lot of big enterprise household merchants, and what I always say is like, every month you have a natural churn on your card on file because cards are expiring every month. Imagine you can have a payment method that once you just, like, if you're Netflix and you establish one payment mandate with your consumer and that mandate never expires, you avoid that natural attrition that you have every month on card expiries. And so when you sort of explain the value of this to the merchant, it becomes an obvious choice for them. That coupled with the better user experience that you're offering when the user actually signs up for it. And I think the value of the product becomes very obvious. And then it's really just a matter of bringing enough coverage to the market and bringing enough banks to the table to make it a viable service.
Yeah, I think in the US, that is the biggest hurdle, right? Many merchants are looking at real-time payment rails for pay-ins as a artificial churn event that they don't necessarily want to introduce, right? So the analogy with the card churn for not being an evergreen payment method that has an expiration date set to it now is being offset by a monthly ping to the consumer that they need to log in and accept the payment, right? So I think that is where fintechs could really help, streamline that particular payment method use case, right? And make it seamless, make it final, make it non-revocable, which is, I think, ultimately what the merchants want. They want something that is instant. By the way, so do consumers on the payout use case, right? I think there are benefits on both sides of the equation. That's what's driving adoption of RTP. Right now, again, sticking to the US use case, that's why both the clearinghouse's RTP rail and FedNow, as we expect it to launch in its first iteration, will likely only support payouts as a use case, because we have not figured out what a viable user experience that doesn't introduce artificial churn on the pay-in use cases, right? And that applies to VRP for billers, but I think it's bigger than that. Any sort of payment acceptance use case will have to deal with this to a certain extent. And I think I'd love to hear your perspective on this, on the different geos you operate. In South America, I think there are certain steps, certain hoops that consumers need to go through. From the merchant ecosystem to the bank account to the bank app to potentially a third party to authenticate and sign off. So it could be improved. That's, I guess, what we're advocating for. And luckily in the US, being a laggard is helping us see what works and what doesn't. So we don't roll out something that can hurt conversion, that can hurt top line revenue for merchants.
Yeah, so we're seeing a lot of probably touch points in terms of, so we're talking about user experience, we're talking about cost, we're talking about risk. So because of the different benefits that account-to-account payments can have, what are some of the use cases where you're particularly seeing more traction in your markets in account-to-account payments?
I can start on this. I think there's been a natural evolution across the board, regardless of the market that any of us are operating in, and that's that the use cases that have kind of led the account-to-account payment space have been usually use cases that have struggled to necessarily adopt cards in the past. So, for example, online gaming has historically been a very underserved vertical, right? The gaming companies don't like to accept cards because they're expensive. The PSPs charge them a high fee. Fraud becomes very prevalent. And so if you offer them an open banking type solution where the funds settle instantly, so therefore there's less room for fraud, if you can authenticate directly with the bank, it just resolves a lot of the issues that the incumbents do. And so a lot of the early use cases have been use cases that have been underserved by cards. And I always say, like, you have MCC codes in the card industry, and MCC codes associate to a certain level of risk. you could probably rank order those MCC codes by risk profile, and from high to low risk is kind of like how the trajectory of account-to-account payments has been evolving in different markets. Now that it's much more prevalent, the methods have been refined. Now you're starting to see mainstream use cases of it, right? So here, one of our favorite customers that I always love to talk about is Kazoo. It's a car marketplace. You can buy a car now with our payment method. Not only in terms of the buyer, but also the seller can get paid out with our payment method instantly for the sale of the car. And so it's starting to get more and more mainstream. And of course, now as you get more and more mainstream, then you also have a different level of challenge, right? Like, so recurring payments. If you at some point want to service most of the online payments, which are recurring and subscription based, then suddenly you have to go from single initiation payments to recurring payments. And I think that's happening. But overall, it started with the higher risk verticals, and now it's slowly starting to go into some of the more day-to-day mainstream use cases.
Which is also natural, I guess, especially the car purchase, because it's a quite high ticket, which is also then for a merchant, it's a quite or pay by bank is a good method for that. But no, I agree. I think that that's the trajectory that we're heading towards. But then we're also heading towards the actual, if I may say so, actual day-to-day use cases, where, I mean, I think we I think have also been very focused on this, right, and to continue on that sort of scale, and want to reach as many people as possible with our technology, to be able, with our customers, then, I mean, change end user behavior, because that's what we need to do to really reach, I mean, adoption. And now we have a partnership now with Adyen in Europe to provide pay by bank in their checkouts, which would really make us touch several tens of millions of end users through that partnership. So very happy about that, and then also reach also more high frequency merchants. So very excited about that being rolled out now in the UK, and then rest of Europe coming soon.
Yeah, I completely agree with the two of you. I think maybe one nuance about the North American market is the ever-growing interchange fees that the card schemes and card brands impose on merchants, right? So I think cost optimization, especially in this sort of chase for efficiency that we're in today, has opened up opportunities across verticals that historically were not potentially contemplating account-to-account payments. Our start in North America was spike. You were spot on, right? We're underserved vertical use cases like gaming, crypto on-ramps, things like that, where the MCC codes were not providing the level of approval rates that merchants needed, so they were missing out on top line revenue. So here comes a payment method that because of the visibility and into the consumer bank account has a very good grasp on their ability to pay, their propensity to pay, it sort of eliminates the risk of fraud to a very high degree. We also offer a guaranteed payment method in the US. So funds are instantly accessible for that consumer to bet on a game, buy the hottest cryptocurrency out there. So that was a very good fit. But we see great traction in the biller vertical, right? We work with AT&T since 2014. We work with Verizon. We work with T-Mobile. Plenty of other biller opportunities in the US. So I think that there's a perfect fit. And back to your point, Jesper, I think there's a great opportunity with high frequency merchants with small AOVs that are seeing their bottom line hurting in their P&L because the cost of processing payments with Visa, MasterCard is takes up a big chunk of their profits and their margins. So especially in these days with high inflation, a potential recession in the horizon, many merchants are turning to us to see, hey, how can you help us optimize my payment strategy, overarching cost of payment acceptance, because my dependency in cards is just too high for me to cope. And there's a ton of industry groups that are merchant driven in driving that conversation with Washington. There's expected regulation following numerous merchant complaints about this, and this is not unique, right, to the US. I think we've seen Amazon in Singapore threaten Visa to potentially remove them as a payment method if they don't lower their interchange fees. So I think the ecosystem is looking at potential avenues to help merchants, and that will naturally drive adoption of A2A.
Excellent. So I think we have time for one last question. Probably we can ask each one of you. I mean, how do you see account-to-account payments evolving in the next years, and the real impact that you think it can have on the global financial ecosystem?
I mean, happy to start and maybe the less visionary version, and then someone else can chip in with more. No, but I think that, I mean, if we only look at a few years horizon, I don't think that we will see major changes beside this sort of continuously the trajectory that we're already on. There are so many things, as I said in the beginning, the stars are beginning to align, right? And we now need to sort of continue and push on this trajectory, everyone in the ecosystem, and that sort of improving that payment experience and perfecting the payment flows, and increase sort of awareness and adoption. And then we're still so very early on that adoption curve, right? Looking then more long term, perhaps. I mean, of course, I mean, expanding from online to physical point of sale for account-to-account payments is, of course, super exciting for everyone here. I don't think that I, at least, don't have the exact answer to how to do it, right? But imagine a tap to pay with a bank transfer under the hood, the enormous potential of all the high-frequency retailers and public transport, etc. That's super exciting, and yeah, that's why it's so exciting to be in this business as well, right? So we're four fortunate gentlemen on this panel.
Very true.
When I think about our respective payment methods over time, I always like to think, what are we competing with over time? So, for example, when we first launched our payment service, our immediate competition was probably something like a manual bank transfer. You could either type in the numbers individually and it's a very sort of suboptimal experience, or you can kind of initiate the transaction. All you have to do is authorize it. And so you start with like this really poor payment method that you've replaced. And then over time, then you're saying, okay, now it's gotten to a level of quality where now I'm competing with the next best payment method, let's say direct debit. Then at some point you're competing with card. And I think over time, as the payment method gets better and better, the alternative that you're sort of competing with also becomes harder to displace, right? So Jasper mentioned point of sale physical. At some point, you're going to be competing with whatever the physical alternative is, and that'll be the sort of the hard thing that you have to overcome to get the next level of growth. If I look at like 5-10 years, today we might be saying we're trying to displace cards, but really on a 10-year horizon, our competition is probably something like an Apple Pay. Like the experience on a digitally embedded wallet on your Google phone, your Apple phone, is extremely efficient. It's superior. A lot of these companies are sort of building their own infrastructure to power it as well. And looking far out, like if you're trying to build a payment method, you are really competing with the payment method that's already been installed on your consumer's phone on day one. And I think that'll be where the longer term battle is probably going to be fought.
Just one quick one, because I agree with what you've both said. I think maybe another one food for thought for the future is redefining what is an account. right? Because I think we're taking for granted that that's a bank account, but I can see a future where there's store value containers outside of bank accounts, and enabling consumer access to those funds, whether that is, a wallet of a third-party merchant, whether that is, a crypto wallet or account where someone's holding, significant funds that they can be used for payments. That could be also folded into account to account at some point. So I'll leave that there. How about that?
Excellent. We're probably on time. When I would personally have loved to stay chatting with you about this topic for hours. But Pike, Andres, Jasper, many thanks for being with us today. It was a tremendous pleasure for us having you joining this panel, and we wish you all the best in this amazing adventure of account-to-account payments. And thanks everyone for joining this panel today. We hope you enjoyed it as much as we have. And we also hope that you keep benefiting from the rest of the sessions of OpenViews 23. So thanks a lot, and see you soon.
Thank you.
Thanks for having us.
Thank you for having us.